Welcome back to Intercorp Legal Podcast, the show where we connect complex legal frameworks to real-world business strategies.
Its focus, how the label of market economy versus non-market economy is more than a technical distinction, is a deciding factor that can redefine your cost structures, your export strategy, and even your entire supply chain approach.
Now let's lay the groundwork. In global trade law, market economy status means your production costs and sales prices are accepted at face values in anti-dumping investigation.
For countries like Germany, Japan, and Australia, this translates to predictable risk management because the authorities trust their market-based price.
Exactly, but for countries classified as non-market economies like Vietnam, China, and Russia, there is an inherent presumption that prices are artificially influenced by state control, subsidies, or other distortions.
The result? Investigators use surrogate country prices, typically from comparable market economies, which can be significantly higher.
That's not just a footnote in a legal brief. It inflates your domain margins, leading to higher anti-dumping duties that directly erode your export margins and global competitiveness.
And here's where the Vietnam story comes in. In 2025, the US launched an anti-dumping investigation on Vietnamese imports. Despite no clear evidence of unfair dumping, Vietnam's non-market economy label meant the US substituted Vietnamese data with higher third country data, resulting in a 46% anti-dumping duty.
Well, this 46% isn't an ordinary import tariff. Legally speaking, it's an anti-dumping duty, a penalty under US and WTO rules, triggered solely because of Vietnam's non-market economy designation.
And for Vietnamese businesses, this duty isn't just a compliance headache. It reshapes your entire cost-benefit calculus, from rethinking pricing structures to considering shifting parts of your supply chain, or even exploring new export markets to mitigate risk.
Let's zoom out for a moment and consider the bigger picture, the Vietnamese legal landscape.
Vietnam has been actively working to show that its economy operates under market principles. Domestic reforms, improved transparency, and adherence to WTO commitments have all been part of this effort.
But international recognition is still heavily influenced by political dynamics and strategic interests of importing countries. So for Vietnamese exporters, relying solely on these reforms is not enough.
From a business strategy perspective, it means you need to robust internal compliance, from clear pricing structures to documentation that supports your market-based practices.
Yes, and it's also about knowing when to adapt, whether that's diversifying your export portfolio, negotiating directly with partners on fair trade terms, or leveraging trade remedy laws in Vietnam, which allow Vietnamese companies to challenge unfair anti-dumping measures abroad.
Let's wrap up. Market economy status means your data is trusted, or more objective investigations and lower legal risk. Meanwhile, non-market economy status means your data is replaced. That is to say, higher trade penalties and a need for strategic adaptation.
One legal label, but two very different realities for your bottom line.
And for Vietnam, that 46% anti-dumping duty in 2025 is a powerful reminder. The legal landscape is a key part of your business strategy.
Thank you for tuning in to Intercorp Legal Podcast. Stay legally sharp, stay globally competitive. Until next time.